Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect, and your financial growth. The bank promotion exams 2025 to 2026 are your golden opportunity, and I am here to make sure you grab it with both hands. In this journey, we will learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success does not come to those who wait, it comes to those who prepare. So, let's start today, prepare smartly, and make your promotion in 2025 to 2026 a reality. Welcome to part 35 of my Path to the Corner Office 2025 to 2026 series, where we break down real bank promotion exam questions and give you clear, practical sample answers to help you climb the career ladder faster. Today's subject: Bank of India's NPA Management DFS Directions for Expeditious Disposal of Cases before DRTs and DRATs. Under DFS directions, who must ensure filing of caveat under Section 18C of the SARFAESI Act? Option A, borrower. Option B, authorized officer. Option C, district magistrate. Option D, tribunal officer. The answer is option B, authorized officer. DFS has directed that accountability of which officer should be fixed for delays in SAR FAESI process. Option A, nodal officer. Option B, authorized officer. Option C, presiding officer. Option D, zonal manager. The answer is option B, authorized officer. Who should attend every DRT hearing in high value cases as per DFS instructions? Option A, branch manager. Option B, AGM or DZM, recovery as nodal officer. Option C, borrower's advocate. Option D, RBI nominee. The answer is option B, AGM and DZM, recovery as nodal officer. DFS advised meeting with presiding officers of DRTs on what frequency? Option A, monthly. Option B, quarterly. Option C, half yearly. Option D, annually. The answer is option B, quarterly. Which Act Section 193A requires adding details of non-mortgaged assets while filing OAs? Option A, SARFAESI Act. Option B, RDB Act. Option C, Companies Act. Option D, IBC 2016. The answer is option B, RDB Act. The next subject is Bank of India's NPA Management, Lok Adalat and DRATs. Which act provides the statutory basis for Lok Adalats in India? Option A, Arbitration Act 1996. Option B, Legal Services Authorities Act 1987. Option C, Civil Procedure Code 1908. Option D, Indian Evidence Act 1872. The answer is option B, Legal Services Authorities Act 1987. What is the present monetary ceiling of permanent Lok Adalat? Option A, rupees 10 lakhs. Option B, rupees 20 lakhs. Option C, rupees 50 lakhs. Option D, rupees 1 crore. The answer is option D, rupees 1 crore. Award of Lok Adalat is deemed to be equivalent to option A, order of RBI. Option B, decree of a civil court. Option C, decision of High Court. Option B, tribunal certificate. The answer is option B, decree of a civil court. Lok Adalat awards are option A appealable in High Court, option B final and binding with no appeal, option C subject to revision in DRAT, option D advisory only. The answer is option B final and binding with no appeal. Who must attend Lok Adalat to sign awards on behalf of the bank? Option A zonal manager, option B designated officer from ZO with delegation, option C presiding officer of DRAT, option D RBI inspector. The answer is option B designated officer from ZO with delegation. The next subject is Bank of India's NPA Management SARFAESI Act 2002. The SARFAESI Act was enacted in which year? Option A 1992, option B 1999, option C 2002, option D 2005. The answer is option C 2002. Under SARFAESI, banks can enforce security interests without the intervention of option A RBI, option B courts or tribunals, option C state government, option D Ministry of Finance. The answer is option B courts or tribunals. Minimum outstanding for a loan account to be eligible under SARFAESI Act is option A rupees 50,000, option B rupees 1 lakh, option C rupees 5 lakhs, option D rupees 10 lakhs. The answer is option B rupees 1 lakh. How many days notice is required under section 13(2) of SARFAESI Act SI before taking possession? Option A 15 days, option B 30 days, option C 60 days, option D 90 days. The answer is option C 60 days. If a borrower fails to discharge liability within the notice period under section 13(2), secured creditor may option A approach DRAT, option B file suit in civil court, option C take possession of secured assets, option D waive the dues. The answer is option C take possession of secured assets. Section 14 of SARFAESI empowers whom to assist secured creditors in taking possession. Option A collector, option B magistrate, option C police inspector, option D advocate general. The answer is option B magistrate. The borrower could file an appeal against measures taken under SARFAESI 2. Option A RBI, option B DRT, option C Supreme Court, option D Ministry of Finance. The answer is option B DRT. Time limit for DRT to dispose of an appeal under SARFAESI is option A 30 days, option B 60 days, option C 90 days, option D 180 days. The answer is option B 60 days. Further appeal against the DRT order lies before option A RBI, option B DRAT, option C High Court, option D Company Law Tribunal. The answer is option B DRAT. Minimum percentage of deposit required to file appeal with DRAT against DRT order is option A 25% of debt due, option B 50% of debt due, option C 75% of debt due, option D 100% of debt due. The answer is option B 50% of debt due. The percentage of deposit with DRAT may be reduced up to rupee option A 40%, option B 30%, option C 25%, option D 10%. The answer is option C, 25%. Under SARFAESI, which types of assets cannot be enforced? Option A, agricultural land. Option B, commercial property. Option C, residential flats. Option D, industrial plots. The answer is option A, agricultural land. Which type of companies are empowered to act as asset reconstruction companies? Option A, registered under Companies Act and RBI Act. Option B, only government companies. Option C, any NBFC. Option D, only public sector banks. The answer is option A, registered under Companies Act and RBI Act. Under SARFAESI, security receipts are issued to option A, borrowers. Option B, qualified buyers. Option C, RBI. Option D, state government. The answer is option B, qualified buyers. Which authority regulates ARCs under SARFAESI? Option A, SABI. Option B, RBI. Option C, NABART. Option D, Ministry of Finance. The answer is option B, RBI. A securitization company and or reconstruction company must maintain owned fund of not less than option A rupees 25 crores, option B rupees 50 crores, option C rupees 100 crores, option B rupees 150 crores. The answer is option B rupees 50 crores. Which section of SARFAESI empowers secured creditor to take over management of the borrower's business? Option A, Section 9. Option B, Section 12. Option C, Section 13, 4. Option D, Section 14. The answer is option C, Section 13, 4. Debts Recovery Tribunal under SARFAESI is governed by option A, RDB Act 1993, option B, SARFAESI Act only, option C, Companies Act 2013, option D, Insolvency and Bankruptcy Code. The answer is option A, RDB Act 1993. Time limit for publishing possession notice in newspaper after taking possession of secured assets is option A, 3 days, option B, 7 days, option C, 15 days, option D, 30 days. The answer is option B, 7 days. Which is the minimum percentage of secured creditors required to initiate enforcement action under SARFAESI in consortium lending? Option A, 50% in value, option B, 60% in value, option C, 66% in value, option D, 75% in value. The answer is option B, 60% in value. The next subject is Bank of India's NPA Management, Insolvency and Bankruptcy Code 2016. The Insolvency and Bankruptcy Code was enacted in which year? Option A, 2014, option B, 2015, option C, 2016, option D, 2017. The answer is option C, 2016. Which is the adjudicating authority for corporate insolvency under IBC? Option A, DRT, option B, DRAT, option C, NCLT, option D, High Court. The answer is option C, NCLT. The maximum time limit for completing corporate insolvency resolution process CIRP including extensions is option A, 180 days, option B, 270 days, option C, 330 days, option D, 365 days. The answer is option C, 330 days. Who can initiate insolvency proceedings under IBC against a corporate debtor? Option A, financial creditors. Option B, operational creditors. Option C, corporate debtor itself. Option A, all of the above. The answer is option D, all of the above. What is the minimum default amount required to trigger insolvency under IBC as per 2020 notification? Option A, rupees 1 lakh. Option B, rupees 50 lakhs. Option C, rupees 1 crore. Option D, rupees 5 crores. The answer is option C, rupees 1 crore. Who manages the affairs of the corporate debtor during the CIRP? Option A, resolution professional RP. Option B, board of directors. Option C, liquidator. Option D, NCLT. The answer is option A, resolution professional RP. Committee of Creditors COC in CIRP is constituted by option A, operational creditors. Option B, financial creditors. Option C, both financial and operational creditors equally. Option D, RBI nominated officers. The answer is option B, financial creditors. Approval of a resolution plan by COC requires what majority? Option A, 51% of voting share. Option B, 66% of voting share. Option B, 75% of voting share. Option D, 100% consensus. The answer is option B, 66% voting share. Which institution regulates insolvency professionals under IBC? Option A, RBI. Option B, IBBI. Insolvency and Bankruptcy Board of India. Option C, SEBI. Option D, MCA. The answer is option B, IBBI. Insolvency and Bankruptcy Board of India. If no resolution plan is approved within CIRP timelines, the debtor goes into option A, merger. Option B, liquidation. Option C, debt restructuring. Option B, debt moratorium. The answer is option B, liquidation. Appeal against NCLT order under IBC lies with option A, High Court. Option B, Supreme Court. Option C, NCLAT. Option D, DRAT. The answer is option C, NCLAT. The waterfall mechanism under IBC gives first priority to option A, secured creditors. Option B, workmen's dues and secured creditors. Option C, shareholders. Option D, government dues. The answer is option B, workmen's dues and secured creditors. During CIRP, moratorium under Section 14 prohibits option A, institution of suits against the debtor. Option B, continuation of pending proceedings. Option C, foreclosure and recovery by creditors. Option D, all of the above. The answer is option D, all of the above. Fast track insolvency resolution process under IBC is to be completed within option A, 90 days. Option B, 120 days. Option C, 150 days. Option D, 180 days. The answer is option A, 90 days. Under IBC, who can apply for pre-packaged insolvency resolution process? Option A, large corporate borrowers. Option B, MSMEs. Option C, individuals. Option D, partnerships only. The answer is option B, MSMEs. The next subject is Bank of India's NPA management holding on operation. Holding on operation is applied by banks primarily in cases of option A, permanent default. Option B, temporary cash flow mismatches. Option C, fraudulent transactions. Option D, loan write-offs. The answer is option B, temporary cash flow mismatches. When an account is under HOO, what is restricted? Option A, drawing power is reduced. Option B, operations in the accounts are restricted. Option B, loan documentation is frozen. Option D, collateral security is released. The answer is option B, operations in the account are restricted. The purpose of putting an account under HOO is to option A, penalize the borrower, option B, facilitate compromise settlement, option C, protect banks' interest till dues are regularized, option D, convert account into NPA immediately. The answer is option C, protect banks' interest till dues are regularized. Which type of accounts are generally considered for HOO? Option A, accounts showing early signs of stress. Option B, written off accounts. Option C, fraudulent borrower accounts. Option D, government guaranteed loans. The answer is option A, accounts showing early signs of stress. HOO is a preventive tool to maintain option A, asset quality, option B, higher provisioning, option C, capital adequacy ratio, option D, profitability ratio. The answer is option A, asset quality. The next subject is Bank of India's NPA management, scale of financial assets to ARCs, ASCs, NARCs, others. Asset reconstruction companies in India are governed by option A, RBI Act 1934, option B, SARFAESI Act 2002, option C, Companies Act 2013, option D, Banking Regulation Act 1949. The answer is option B, SARFAESI Act 2002. Minimum own fund requirement for an ARC as per RBI guidelines is option A rupees 25 crore, option B rupees 50 crores, option C rupees 75 crores, option D rupees 100 crores. The answer is option B rupees 50 crores. Sale of NPAs to ARC should generally be done on the basis of option A, RBI's reserve price, option B, realizable value as per latest valuation report, option C, negotiated value between parties, option D, government fixed price. The answer is option B, realizable value as per latest valuation report. ARCs issue which instrument is to qualified buyers against acquired financial assets. Option A, bonds, option B, debentures, option C, security receipts, option D, promissory notes. The answer is option C, security receipts. Who are eligible investors in security receipts issued by ARCs? Option A, any retail investor, option B, only RBI, option C, qualified buyers, option D, cooperative banks only. The answer is option C, qualified buyers. Which institution regulates and supervises ARCs in India? Option A, SEBI, option B, RBI, option C, Ministry of Finance, option D, NCLT. The answer is option B, RBI. When a bank sells financial assets to an ARC, the transaction must be option A, with recourse, option B, without recourse, option C, partially with recourse, option D, as per borrower's consent. The answer is option B, without recourse. Which of the following is not a permissible mode of resolution by ARCs? Option A, change in management of borrower, option B, conversion of debt into equity, option C, restructuring repayment schedule, option D, waiver of RBI regulatory norms. The answer is option D, waiver of RBI regulatory norms. National Asset Reconstruction Company Limited was set up to option A, acquire stressed assets from banks, option B, provide refinancing to banks, option C, act as a credit rating agency, option D, manage government securities. The answer is option A, acquire stressed assets from banks. Sale of stressed assets to ARCs helps banks mainly in option A increasing in NPAs, option B cleaning balance sheets, option C increasing CRR requirement, option D reducing CASA ratio. The answer is option B cleaning balance sheets. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.